And welcome to another Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is an amazing way for you to create and preserve more wealth when exiting highly appreciated assets by deferring capital gains tax and reinvesting in optimal timing, or helping your friends, family, or clients do the same. Hi, I'm Brett Swarts, and I'm founder of Capital Gains Tax Solutions, and I'm also the host of the Capital Gains Tax Solutions podcast, where each and every episode we're bringing on some of the best real estate, financial, wealth, and sometimes digital securities minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. We're also streaming on expert CRE secrets as well. So appreciate all the commercial real estate folks listen to us out there. I'm excited about our next guest. He's out of the Seattle, Washington area, and he's the Chief Executive Officer of Blue Canary Capital. He has over 30 years of experience in fintech and software development, and has a proven track record of identifying and investing in innovative companies with high growth potential. Blue Canary Capital is the second fintech company this gentleman has founded and led, and the first was the Seattle-based tax giant Avalara, a leading provider of cloud-based compliance solutions for global commerce, and so much more. Please welcome to the show with me, Rory Rawlings. Rory, how are we doing?
I'm doing great. It's a great morning this morning.
Absolutely. And for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Oh, sure. So I came out of the Seattle tech community and started really in the early days of Web 2, started an internet tax company, sales and use tax, a very common problem throughout the US. And we built that company over 17 years to become the giant of sales tax. So now with Blue Canary, we've just acquired a new company called Fin. It's at fynhq.com, finhq.com. That company is all about digital taxation. So I'm going to repeat what I did in the sales tax space, in the digital tax space. And the timing is perfect because the IRS just released new rules on August 29th.
Absolutely. We're going to be diving right into that, which is the 1099 DA.
That's exactly right.
Yeah, and is the IRS coming for crypto? And by the way, if you want to dive in right now and to connect with Rory, you can go to bluecanarycapital.com. That's bluecanarycapital.com. And then we're going to add the QR code if you're watching us on YouTube, so you can just click on to that as well. But so Rory, let's dive. Actually, before we even go there, Rory, I think I believe we've all been given certain gifts, and these gifts have been given us to be a blessing and help to others. I'm curious, what would you say is your strength or the gift that you believe you were given, and how does that help how you help and bless people today?
Well, the gift of, wow, that's right on the spot. So the gift of really kind of understanding and looking at a business and how do we fit that into our ecosystem. So I think I'm uniquely qualified to as we build out this Blue Canary ecosystem in the white hot center of sports, entertainment, and gaming. But one big key part of that is compliance, and compliance is all about for us, it's digital asset compliance.
Okay, excellent. That sounds good. And with that in mind, let's dive right into the topic at hand, which is the IRS coming for crypto and the 1099 DA? So Rory, based upon your research and everything that's happening in the space, what would you say is the number one thing that people need to know right now regarding the 1099 DAs and about the IRS coming for crypto?
Well, first of all, who's on the hook? So the IRS has a broad definition of digital asset brokers. So that encompasses centralized exchanges, decentralized exchanges such as Coinbase and Uniswap, digital wallets such as MetaMask, payment processors such as Coinify, and even Bitcoin ATMs. If you're in a position to know the nitty-gritty of transactions, congratulations, you're a broker, and now you have reporting duties. So why is this happening? The IRS has long targeted crypto as a significant source of unreported income. So with President Biden's Infrastructure Act of 2021, brokers must report customer gains and losses to the IRS annually.
Okay, so how has this changed from what it was before? I think that's important to understand, right? You mentioned some of the players there, understanding where money's moving, but talk about, I guess, what it was before. Maybe just break down an example of transaction and movement of funds, and then now what this means.
That's a great question, because say, for example, if you were trading either on a Kraken or Coinbase, in the past, they would have submitted a 1099 miss or some other type of a 1099 that's reporting primarily just gross proceeds. So, for example, if you've dealt with stocks, you're familiar with the 1099B. So with the new Form 1099-DA for digital assets, it will cover very similar grounds. So it'll cover with the acquisition dates, cost basis, disposition dates, and the sales proceeds. But most importantly, it also reports the gross proceeds, which is essentially the total transaction volume, regardless of the gains and losses. This is a real problem and a point of contention and confusion and over-reporting in the past with similar forms. So it's crucial to keep an eye on this.
Okay, so if I'm hearing you right, it sounds like it's this gross proceeds part is kind of the crux of this, right? Because maybe it's confusing for the person who's trying to report properly and how it could be determined. I guess walk through an example of what that would look like in the proper way to do it and what the common mistake could be.
That's great. That's great. Because so I think the biggest issue is that in the digital asset realm, most people it's all about self-custody. Digital asset brokers need to share cost basis information with each other. This is a massive shift in the crypto space, which values privacy and self-custody and decentralization, which means that because it's a self-custody, the brokers don't necessarily know. They don't know what the basis is. So missing or incorrect information can lead to complications, meaning that you need to calculate your crypto tax basis on time and accurately. So accuracy is not the only consideration for crypto taxation, believe it or not. Scalability to handle the load during crunch time of tax season is the Achilles heel for most crypto tax solutions.
Okay, so let's walk through this, right? So I bought some Ethereum on Kraken and Coinbase, and perhaps even bought it a couple years ago, and things have gone up, things have gone down, and in the meantime, I've been doing the 1099 miscellaneous, right? I mean, just what they just provide for us, and then you send it in to your tax preparer. Yep. Now, this is going to be hands-on for the consumer and/or confusion for the consumer. Or the investor, I guess is the way you would put it. Is that a fair summary?
That's a very fair summary. And really the way to get out of that confusion is to work with a sales tax solution and an accurate sales tax solution that can go back and work with you to identify when those assets were acquired and calculate what the basis is so that you can accurately report it on your tax return.
Got it. Exactly. That makes sense, right? So essentially it's having someone like you guys, right? BlueCanaryCapital.com to be able to help everybody properly find the basis and properly report it on the 1099 DA so that no one's getting in tax trouble. By the way, you can go to bluecanarycapital.com to learn more about this. So Rory, what would be the next thought on this or something to make sure that people are aware of if they're investing into crypto, or just thoughts on strategies here?
Well, the strategy is that once you receive your 1099 DA form that's been sent in to both the IRS and to you, on that form will be the total gross proceeds, as well as an attempt to provide the acquisition dates, the cost basis, and the disposition dates and sales proceeds, which are common to the to stock transactions, right? So when you transfer your stock from E-Trade to Merrill Lynch gets the basis for all of those stocks, for each one of those stocks, because they're held by brokers. The difference for digital assets is their self-custody. They're sitting in your MetaMask wallet, for example. And now MetaMask knows that you've transferred that to another wallet, which means that they need to report that transfer has happened. Well, that's not necessarily a sale. So because of the self-custody and that it's not in brokers' hands, there's a lot of missing information that creates a lot of confusion, which means that that in order to get your taxes calculated properly, you need to calculate your basis properly. And the only way that you can do that is with accurate software.
Got it. Yeah, and so this is really a whole. In one ways, it's what the brokers like the E-Trades or the Merrill Lynches or the Morgan Stanleys have been doing, and in other ways, this hasn't been. And so this is essentially, expanding the reporting responsibility for the investor, and drastically, right? And yeah. So okay, got it. So we got the need, we got the challenge. And then we have the, a solution with bluecanarycapital.com. I guess maybe, but break that down. What would that look like if someone would say, okay, great. I understand that I need, I've got a complex, investments into crypto. I need to properly report this now. What would be the steps for working with a group like you guys, Rory?
Well, step one is that you would, once you receive the 1099 DA, you load up go to our website. It's not a loading process. It's just a matter of connecting up your account to your different brokers, and then all of the once you connect to all of the different brokers. See, the problem is that you'll be getting, the IRS will be getting 1099 forms from multiple brokers, and the information will be very confusing, and it will be a total amount. It won't be the basis numbers. So in order to actually calculate those bases, once you load or connect to our software, log in and connect to each one of your accounts at each of the brokers, it will actually connect with those API and go back and calculate your accurate basis and put it on your tax return and provide that information for your tax return.
Got it. So it sounds like it's pretty automated in that sense, in the sense that once you're connected to your guys' ecosystem, and you're given the authority for the ecosystem to go find the data, it's going to be able to compile it and help to make this, as simple as it can be. Is that a fair summary, Rory?
That's a very fair summary. Yes.
Okay, excellent. So now let's, by the way, you can go to bluecanarycapital.com. It's bluecanarycapital.com. It's a QR code. If you're on our YouTube channel, Capital Gains Tax Solutions or Expert CRE Secrets, in the top corner, you can also take a picture or scan that with your phone and then take it to the website. Okay, so let's shift into capital gains tax as it pertains to exiting highly appreciated assets, Rory, especially as it pertains to cryptocurrency. What would you say the biggest, frustration is that you've seen in the past when somebody, doesn't necessarily want to move to Puerto Rico, right? Or has bought a coin, a digital asset at a very low basis, and they've 10, 100x their investment, and they're looking at massive amount of capital gains tax. What's the biggest frustration when it comes to exit as it pertains to planning that you're aware of?
Well, it really comes down to how do you plan to avoid taxes, and I think there's a lot of confusion, especially with people in the crypto tax, in the crypto investment space. Not everyone. There's a lot of newer investors in that space that don't really understand how to necessarily protect their income, or protect their, not income, but their capital gains. And so, there's a real opportunity in this space to begin to talk about how do you protect those gains, rather than just turning around and paying them all to our fair government.
Absolutely. And, by the way, we have a solution for that. And I'm curious what you think, Rory. We call it building a capital gains tax exit plan. It works for any asset of any kind, including crypto. In fact, one of the biggest ones we've done was Bitcoin and Ethereum exit before, I'd say the crypto bear market here, right? And they exited. One particular client, she lived in the Silicon Valley and she worked for a big tech company, and she bought Bitcoin at a very low basis. around 50,000 total worth of value. And then it went up to $50 million. And so she had never really exited the crypto because she didn't have a great exit plan for the capital gains tax, one. And two, she didn't have a great place to invest the funds for an alternative, at least for her at the time. So she used our services. She exited the crypto into the trust that we helped to set up and create. And then she was able to defer the tax. Now we exited at 54,000 a coin. It went on to go about 68, 69,000 a coin. And I think it dropped to about 15 or 20 or so. But she was able to get out and diversify that wealth and use that to fund a new business venture. Defer the tax, somewhere around maybe 37% of the gain, and essentially diversify, right? And so I'm just curious, before the show, or maybe even before speaking with Douglas, right, one of your business partners, had you heard of anything like that before? And I'm curious, because you've been in the tax space, what are your thoughts on all what I just said there?
So honestly, Brett, until I did a little bit more research concerning what you do, I have to be honest. I have not been, cognizant of capital gains exit plans, or even what a DST was until I, researched you and discovered some pretty amazing ways to defer taxes.
And it's interesting, right? Because you've been in the tax world, right? And in the tech world and such. And there's all these little niches, right? There's so many things that we're still learning every day. So we had another one who did Ethereum exit, and he worked for Ripple, right? And so he had a lot of Ethereum, and for him, he rode the wave of Ethereum for multiple, over years. But $100,000 investment went to like 13.5 million. And I'll never forget, I'm driving Rory to the Bay Area. He's on the other side of the Bay. I'm going for different things. It's Saturday morning, and Ethereum hit the $3,000 coin amount, right? And so we exit over the next couple hours, $5 million worth of Ethereum, defer all the tax. Here's the other thing too. He had a lot of that, and this was a couple of years ago, right? But he had a lot of that at Celsius, right? He had a lot of that in certain places that are now not even existent, right? Or, have completely collapsed, or a lot of the money's gone, right? A lot of the coin is gone. So talk about the importance of exiting when it makes sense for you, right? And diversifying and having that freedom to go back into crypto or into real estate or into like a tech company like yours, or just what that can mean for those that are listening to this as they're, navigating the world of cryptocurrency and investments.
Right. So diversification and protecting your tax exposure is very important for any type of investment. So absolutely agree there that but yeah, from a capital gains perspective, and really understanding what is what and when is taxable, so that you can work with you to appropriately protect your assets.
Yeah, and then likewise, when you're going to report it, if you're not exiting those highly appreciated assets and incurring capital gains tax, I think the key here is knowing how to build a team of professionals to help you execute that particular problem that you're trying to solve. And sometimes you're in the hold period. And if you're investing in a cryptocurrency like probably Rory and I are on a consistent basis, you're going to want to make sure you have somebody to properly aggregate the data, right? And be able to properly seamlessly report it, so you're not having a tax problem there. And then when you go to exit that highly appreciated asset and you want to defer the capital gains tax, right? So you're moving it. Then you want to be able to have a plan, and that's where we come and go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. And for Rory, it's bluecanarycapital.com. bluecanarycapital.com. All right. So I think we've touched on that. Anything else you want to touch on as far as just the overall crypto market right now, Rory, what you're seeing or thinking or feeling about what's going on, and or just the overall regulatory state as these new type of changes are coming out, like the 1099 DA?
Well, I found that it's very interesting that over the past recent since really the before the beginning of the year and really into the beginning of the year, the SEC has really begun to focus very intently on the crypto space and the crypto markets. What I always found interesting is that even though there's has been a little bit of a discussion around, from the IRS perspective, there really hasn't been much to talk about. But they are the organization that is going to make sure that they will find and collect the taxes that they're due. So the real message here is, not only do you need to be cognizant of the 1099 DA, but you also need to work with your organization to make sure that they're properly protected.
Absolutely. Yeah. And so make sure you have a plan, make sure you have a team to execute the plan.
Right.
And then so you're not getting caught by surprise, or you're not paying more than your fair share, and you're using every legal means necessary to report and to defer tax. That being said, Rory, we're out of time, but are you ready for the lightning round?
Oh, sure. I'm always ready.
All right, here we go. Knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget you'd make sure to tell yourself to do?
To save more.
Excellent. Question number 2, what's the number one book you've recommended or gifted the most in the past year?
Do the Work.
Who's it by? I guess they can just look that up.
Oh my gosh. I forgot the author's name. The other one is Outlive by Peter Attia.
Okay.
Now that's a wonderful book. Outlive.
Do the Work and Outlive. Excellent. Question number 3, what are you most curious about right now?
Right now, I am honestly, I've really been digging back into and spending a lot of time in tax. Excellent.
I'm curious on your overall investment thesis or strategy. Are you investing, some in crypto, some in regular securities, some in the stock, some in real estate? What's your Rory's overall philosophy and strategy for investing?
I've kind of an unusual strategy around investing. So we've been going through we've been acquiring and operating companies. So we've acquired this Fin company. We've acquired a company called Wi-Fi Connect that does Wi-Fi networking and we're working on a deal in Guatemala City, working in Morocco, especially after the recent earthquake, and we've got some other deals working there. And then I've got another subsidiary called the Team app, which is all about sports and wellness.
Amazing. So it sounds like you're very focused on the entrepreneur who's doing big things in creative ways.
Yes.
And part of because that's what you've been doing in your career. So you can probably see the ones that are perhaps going to do pretty well. Do you have a fund that does that? Or are you just kind of doing that individually, or do people come to you and be like, hey, Rory, we want to jump in a deal with you, right? I'd imagine, or how does that all work when people come to you like that?
So what it is that Blue Canary Capital is the parent. New Era, the corporate logo that's behind me, that's one of our subsidiaries. It's an operating company in the film and gaming space, and then we have 3 other operating companies that we are with great CEOs that we're accelerating and really, I mean, our group is really big around business development. So we're well connected in our industry space. We can help each one of our subsidiaries grow rapidly and really take that a hockey stick and bend it at a steep grade up.
Wow. And so if someone's an accredited investor or someone wants to invest with you guys, are you guys bringing in capital from retail investors or credit investors?
Actually, yes, we are. I've got 2 companies that are just beginning the raise. 2 very exciting companies, frankly, that are just beginning the raise process. Yes.
Excellent. That's cool. And by the way, I'm curious, do you actually invest into crypto yourself as well? Do you do that?
Absolutely.
Yeah.
I have for many years.
Okay, excellent. Yeah. And so I want to bring us all together, right? You have someone like Rory who has got an extensive experience and background in all things like fintech, entrepreneur businesses, startups to successes to helping with crypto, and then bringing on the back end, reporting for taxes, and then bringing on the back end of places to invest. And so the neat part, by the way, we'll kind of bring this all circle, is with the deferred sales trust, what we offer is once you defer the tax, we want to have a place to invest it. And so if you're in the crypto space, the business space, or whatever you're selling, right, you want to have a chance to diversify. Blue Canary Capital could also be a great place for the capital to go to grow that in a diversified way. That makes a lot of sense. Second to last question, Rory, what's your favorite leadership quote or theme that you strive to live by?
It is, I don't have it right next to me, right? I usually have it right next to me.
Just think of it kind of the general one.
I'm sorry?
The general idea of it, like what's the
so get into the ring, get into the ring, and be a part of something that is real and significant. Don't stand on the sidelines.
Fantastic. Last question, Rory. After all your success, helping all the people you've helped and building all the businesses you've built, what's the practice or the habit you try to practice, on a consistent basis to help you stay centered in your values and then stay encouraged to charge forward to reach even higher heights?
I meditate every morning, and to make sure that I'm in that quiet space. So, meditation is extremely important to make sure that I stay centered and stay centered.
Perfect. Awesome. Well, I want to thank you for being on the show. I want to thank you for sharing so much wisdom with us. I want to thank you for bringing to light the 1099 DA and helping to break it down in a simple way, but also having seen this before, knowing that this is going to be a need in the future, having prepared Blue Canary Capital to help people with, reporting properly, aggregating the data properly, the basis properly, so that it can be seamless, so they can focus on investing or their business or whatever else they're doing, rather than diving into all those little details with the tax. I want to encourage you to keep using your gifts of just brilliance when it comes to all this space, and make a big difference for everybody. For people who want to get in touch with you one last time, what's the best place for them to find you, Rory?
You can send me an email at rory@bluecanarycapital.com.
Perfect. And I also want to thank all of our listeners for listening to another episode of the Capital Gains Tax Solutions podcast, also streaming on Expert CRE Secrets, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options, and not having a clear plan is the enemy. And using a proven tax deferral strategy, such as the deferred sales trust, is an amazing way for you to exit cryptocurrency, businesses, stock, real estate, defer capital gains tax, so you can create and preserve more wealth to help your clients, friends, and family do the same. If you're interested in how to do that, you can go to capitalgainstaxsolutions.com as well, where you could start to build your exit plan, no cost, no obligation analysis. However, it needs to be $1 million net proceeds, $1 million gain. That's our minimum, unless you have two at $500,000 each. Now, crypto's a little bit different, by the way. If you have a number of coins that have at least aggregate over $1 million net proceeds, $1 million gain, there's also ways to customize the plan for you as well. But we've already proven the strategy with multiple crypto exits, as well as businesses and real estate and all kinds of other assets over the years. Go to capitalgainstaxsolutions.com. Also, check out the new book that just got released on Amazon, hit #1 bestseller. It's called Building a Capital Gains Tax Exit Plan. And you can find that. We do have Kevin Harrington from Shark Tank in the book, which is pretty cool, and some other really smart people. That being said, please rate, review, subscribe. Please share this with someone who can make an impact for. Go out there and make a difference.